Welcome to this high-energy explainer where we're going to bypass all the usual noise and reverse engineer the exact mechanics of building a financial machine completely from scratch. Today, we're unpacking the 7-step finance blueprint, building wealth in 2026. And listen, the timing on this, it literally couldn't be more urgent. Between shifting economic landscapes, stubborn inflation, and the whole traditional concept of retirement basically crumbling before our eyes, building a robust automated wealth engine, well, it's just no longer optional, right? It's absolutely essential. So we're going to break down the exact strategies that wealthy use to construct their empires step by step.
We're kicking things off by immediately shattering what is probably the most pervasive myth in all of personal finance. The idea that financial freedom requires rich parents, a massive inheritance, or, a lucky break. Seriously, way too many people treat going viral on social media or waiting for some random cryptocurrency to quote-unquote moon as a legitimate retirement plan. No way! That narrative, that you somehow have to be born into money, is exactly the psychological barrier keeping most folks trapped in an endless cycle of financial anxiety. Instead, the blueprint we're diving into today anchors on one undeniable truth. Wealth is a completely learnable, repeatable architecture that literally anyone can construct. It's a system. Think about it like fitness or cooking. If you follow the recipe, you get the result. Financial freedom operates on that exact same logic. If you just learn the inputs, optimize the mechanics, and actually stay disciplined, you can entirely control the outputs of your financial life.
Okay, moving right along to Section 1, the wealth system mindset.
Let's consider the standard cycle most people are caught in. You know the drill. You work a job, get a paycheck, pay your bills, and repeat. And what happens when your income goes up? Boom! The dopamine hit of a raise instantly vanishes into a more expensive car payment or a bigger, flashier apartment. That right there is the psychological trap of lifestyle inflation. But the wealthy cycle? It completely breaks that loop. Instead of instantly upgrading their lifestyle with every single bonus, they funnel that new income directly into assets. And those assets generate even more income, creating this beautiful, self-sustaining flywheel that eventually leads to true freedom. Now, the absolute core rule for making this shift happen is aggressively delineating your assets from your liabilities. Look, an asset puts money in your pocket. A liability takes money out. I know, it sounds incredibly basic, but it is just so easy to trick ourselves here. Like a massive primary residence with a huge mortgage, high taxes, and constant maintenance. Honestly, that often acts as a massive liability just draining your cash flow. Meanwhile, a modest rental property or a dividend-paying index fund. That's an asset, working quietly in the background 24/7 to put cash right back into your pocket. The fundamental secret here is to ruthlessly acquire the latter and avoid the former. All right, let's jump right into Section 2, budgeting and eliminating debt. This brings us to the actual mechanical routing of your money using the very famous 50-30-20 framework. It breaks down like this. 50% covers your absolute needs, things like housing and groceries. 30% allows for the lifestyle choices that, actually make life enjoyable. But the absolute roaring engine of this entire system is the final 20%. That's dedicated entirely to savings, debt elimination, and investing. And the key insight here isn't just the percentage itself, it's the automation. The wealthy always pay themselves first. They set up auto transfers the exact second their paycheck hits, ensuring that 20% is routed straight to investments before they even have the chance to spend a dime of it. Let's actually apply that 20% savings slice to the real world for a second. If you're earning, say, $3,000 a month, that means $600 is automatically going into your wealth building slice. Now, $600 might not sound like a completely life-changing sum right away, but when invested at a standard 8% return, that $600 a month mathematically transforms into over $80,000 in just 10 years. Wow. And what the source really emphasizes is that this $80,000 isn't just a number sitting on a screen, it's leverage. It's the freedom to walk away from a toxic job, the seed capital to start a business, or the down payment on a major cash-flowing asset.
But hold on. Before you can really step on the gas with your investing, you absolutely have to escape the financial quicksand of high-interest debt. Our source lays out 2 proven strategies here, and it really comes down to one simple question. Are you driven by quick psychological wins or pure mathematical efficiency? See, the snowball method lets you attack the smallest balances first. That gives you a massive dopamine rush and the motivation to keep pushing. On the flip side, the avalanche method ignores the balance entirely and mercilessly targets the highest interest rates first, which saves you the most money over time. Actually, neither one is wrong. Just pick the strategy that aligns with your personal psychology and then execute it relentlessly.
Moving right along to Section 3, building your financial armor.
3 to 6. That is the exact number of months of essential living expenses you absolutely must have parked in an emergency fund. No exceptions. And it is critical, I mean absolutely critical, that this money sits in a high-yield savings account. If you leave thousands of dollars sitting in a standard, old-school checking account, you are effectively bleeding purchasing power every single year because of inflation. A high-yield savings account, or HYSA, protects that cash against inflation while keeping it completely liquid. That way it's ready to go the very moment your car breaks down or some random medical emergency strikes. The source also heavily emphasizes a really hard truth: making money is entirely different from actually keeping it. Trying to build wealth without a trust, a will, or comprehensive insurance is exactly like building a towering skyscraper with zero foundation. One bad storm, or in this case, one unexpected life event, and the whole thing just comes crashing down. So things like health, life, and disability insurance, they are not just annoying monthly expenses. They're non-negotiable defensive shields designed to ensure your financial machine remains completely intact during a crisis. All right, let's shift from defense to offense. Section 4, investing in income streams. 10%. That is the historic century-long average annual return of the S&P 500. And to really understand the sheer power of this, you just need to look at the rule of 72 in finance. Basically, if you divide 72 by your expected rate of return, it tells you exactly how many years it will take for your money to double. So at a 10% return, or even a more conservative 8% if we adjust for inflation, your wealth is effectively doubling every 7 to 9 years. Think about that. You do not need to be some sort of Wall Street stock-picking wizard. You literally just need to buy broad index funds and let time do all the heavy lifting.
At this point, your money is literally working harder than you are. By contributing just $100 a month over 30 years, you're putting in a total of $36,000 out of your own pocket, right? But because of the magic of compound interest, the market spots you over $110,000 in pure, unadulterated growth. That brings you to a grand total of $150,000. It's a mathematical certainty as long as you stay the course. So the most important factor in this whole equation isn't really how much capital you start with, it's simply that you start as early as humanly possible.
Now, to shift from steady growth to rapid acceleration, you must emulate the wealthy by building multiple income streams. Our source breaks these down into 3 categories: active income, passive income, and portfolio income. Your ultimate goal here is to transition away from active income, where you're just trading your hours for dollars, and heavily into passive and portfolio income. In fact, the source heavily champions things like digital products and online courses because, honestly, they're the holy grail of wealth. They decouple your time from your income. You build a digital product once, and it scales infinitely, selling across the entire globe while you're literally fast asleep.
And finally, Section 5, the 10K wealth system. Let's pull it all together.
Here is the ultimate 4-step playbook for stacking your assets, scaling your knowledge, and safeguarding all your hard-earned progress. Step 1, you ruthlessly automate your 20% investment slice. Step 2, you systematically branch out to build 3 or more distinct income streams. Step 3, you leverage highly scalable assets, like those digital products we just talked about, to capture massive passive upside. And Step 4, you wrap this entire operation in the impenetrable armor of proper insurance and emergency funds.
Look, earning $10,000 a month sounds really daunting, almost impossible even, if you're relying entirely on a single salary. But check this out. When you systematically divide that goal across your newly built engine, it suddenly becomes a highly achievable formula. Imagine this: $2,000 from your active work, $3,000 from a consulting side hustle, $3,000 from an automated digital product, and $2,000 just dripping in from your investments. By diversifying the load, hitting a 5-figure monthly income transforms from a pipe dream into a totally mechanical reality.
If you take away just one single thing from this entire explainer, please let it be this: wealth is a repeatable, learnable system. It's not magic. It's just math, discipline, and structure. Once you shift your psychology away from sitting around waiting for a random windfall and actually start actively assembling the gears of this machine, I promise you, your financial trajectory changes forever.
The whole system is laid out right in front of you. The math has been proven time and time again, the strategies are road-tested, and the blueprint is crystal clear. So the only variable left is whether you'll actually start building. It's time to stop relying on luck, start applying these exact mechanics today, and take total, uncompromising control of your financial future. So what are you waiting for? Thanks so much for joining me for this explainer, and I'll see you next time.